Kookie, welcome to our monthly, mate. There's a lot of stuff going to come out this month, a lot of information come out this month. We'll park that for a moment. We'll come back to that. And I know you're sort of big on talking about those sort of things. The RBA meets now when?
It's on the 7th of May.
7th of May, right. So
it's about a month.
That's a new cadence.
The new timetable every 7 or 8 weeks, yes.
And the reason why that date May is a good date is because, and we'll look at your chart a little bit later, but they're going to get data on unemployment soon, and we're going to get data on inflation later this month. What are the sorts of bits of information we due to get? They're
the two critical ones. We've had the other news that's sort of coming out last night, in fact, on the US inflation rate to sort of give a guide to what's happening in the US economy. And just today, as we're speaking, we've just had the Chinese inflation numbers, which are really low.
Okay, so let's come into the US.
They're important, yeah, for sure. Yeah.
Tell me about the US. What happened?
US, inflation's not falling anymore. Inflation started to fall around the end of 2022. The Fed, the US Federal Reserve, their central bank, was hiking interest rates and kept hiking them. And inflation fell and fell and fell until sort of towards the end of last year. And everyone was sort of saying, yep, inflation's on track to get to the 2% target.
Where did it land, though?
It landed a little below 3% at the end of 2023. The last couple of months, including last night's number, it's back up to 3.5%.
So it's kicked up.
So it's kicked up a little bit. Now, a lot of that is things that we're familiar with, oil prices. Feeds directly into petrol prices and the like. They've got an issue with rents, a little bit like here, and some of the services costs. So things like insurance and that sort of stuff were feeding into their inflation rate. So it's not a disaster, but that move to lower inflation has stalled, let's say. And of course, where we were, say, 3-4 months ago, where there were 5 or 6 rate cuts priced into the US, it's now only 2. In 2024.
Okay, can we just dig in a little bit on this? We have an election coming up in the US later this year.
Indeed.
Toward the end of this year. And governments always want to get re-elected. Yeah. And I wonder whether or not there's been a bit of money splashed around in the US and that some of this inflation generating activity or behaviour from consumers is not so much the consumers but more the vendors, that vendors are pushing prices up because they feel as though the consumers can afford it and only in certain segments. So how do you reckon Biden's expenditure process, which is designed to win people over, by the way, how much of an effect do you think that's having on inflation there?
I think that's the telling point. I think you've raised the critical issue on why that inflation rate hasn't continued to fall. Yeah, as I said, inflation in China's falling, in Europe it's falling, in Australia, in New Zealand. Yeah, it's falling just about everywhere. The odd man out, the odd person out is the US, where inflation's stopped falling. And you think, well, why? Why is it the US and not the rest of the world? And you're quite right. Biden, with his, I can't remember what it's called now, the strangely named inflation-busting stimulus measures, so it's sort of counterintuitive, we called it a strange thing, but he has literally allocated, the government has allocated in the US, well over $1 trillion to build sort of renewable energy things, all worthy objectives, but it's happening when inflation hasn't been beaten yet, when the unemployment rate in the US is still below 4%. It's been below 4% for 3 years now. Wages, they've come off a bit, but they're still higher than in Australia. So that inflation momentum is being sparked a little bit, not by the Fed, because they've hiked. Their cash rate.
Federal Reserve as is.
Federal Reserve, their cash rate's 5.5. It's more than 1 percentage point higher than in Australia, just by the way. But Biden administration is pumping money out the door at a great rate of knots, and that's finding somewhere in the economy, whether it's the people who make solar panels or, dare I say it, the bombs that are going around in the world in the war. Some of those armament companies are doing very well, thank you.
And they employ people.
They employ a lot of people and use a lot of resources, a lot of stuff to, must confess, I don't know how you make a bomb, but lots of metal and stuff like that. And they've got to transport it around the place and stuff. So that effect on the economy, putting aside all the social issues associated with that, just for argument's sake, the economic effect is a big stimulus, cash being pumped into the economy just when inflation should be falling, but it isn't.
So our mate Milton Friedman, I've said many times, anyone wants to go and have a go, just YouTube him.
Yep.
Consumers never create inflation or cause inflation. Governments do, because governments spend, put money in the system. So this is an example of fiscal policy sort of working in against monetary policy.
You got it in one. That's the problem. Now, if we just go back to the pandemic, when the wheels were falling off all the economies of the world, fiscal and monetary policy operated in the same direction.
Yep.
Rates were cut, money pumped in, fine, terrific. Yeah, we didn't know where we were during the pandemic. Absolutely appropriate. We've come out of the pandemic, and most countries, and even here, look, I'll give the government a little bit of credit. They've got a budget surplus. Unlike the US. We've had the RBA, as we've discussed many times, hiking interest rates pretty aggressively. And so they're sort of both working. Maybe the government could do a bit more in terms of tightening fiscal policy, but they haven't screwed it up, put it that way. Whereas in the US, we've had the Fed, and that's why the Fed has hiked, the Federal Reserve has hiked more than in Australia. They've hiked 550 basis points. We've only hiked 425. And I think when we sort of distill it into simple terms, there's obviously many complexities. It's probably because fiscal policy, government spending, is a lot more stimulatory in the US than it is in Australia, just for an example.
Because one of the things that has happened, particularly, which I'm pleasantly surprised about, because, we're a Labor country, nearly, other than Tasmania. Like, it's Labor everywhere.
Yep.
Even at state level, someone like Mookie, he's been cutting expenditure.
Yes.
Like stuff that was committed by the previous administration.
Yep.
Daniel Mookie's been out there responsibly saying, no, we're not going to spend that money anymore. We're not extending that rail line to whatever it is to wherever it was originally.
We're going to push it back 5 years when we can afford to do it
correct.
in 5 years' time.
We can't just keep spending money like drunken sailors.
Correct.
And Dr. Jim, he's doing the same sort of thing.
He is.
Here in Australia.
It depends a little bit on states, but, for example, Victoria, which probably has the weakest budget position of all the states, but even cancelling the Commonwealth Games, remember that kerfuffle 6 months ago? Look, fair enough, because it was going to cost them X billion dollars that they didn't have. And, like the federal government, the states' budgets were all screwed up because of the COVID pandemic. Now they've got to repair them. They've got to use, and they don't have the same level of resources to fix their budget. They basically only collect taxes from
stamp duty
and some gambling taxes and payroll tax. Not much else.
They get allocated GST money.
They do get allocated the GST money, but that's about it. They can't just bump up a whole lot of other new taxes without doing much. So in fact, if you look at the good old GDP, C plus I plus G government, it's actually been relatively weak over the last year or two as the budgets have been repaired, and that's as it should be. And as you say, that's a little tick to the governments. They're doing the right thing on average. Maybe they could be doing more, but they're doing the right thing.
Well, they could be doing less too. So I wonder. The US, the Democrats' playbook for winning or being re-elected in the US right now seems to be spend.
Yep.
Are you worried that our Labor Party to be re-elected in 2025, they're going to borrow from the USA playbook? Because they have done a lot of the USA playbook. Not necessarily in fiscal sense, but generally speaking, a lot of stuff they're talking about, new renewables stuff, there is a playbook there.
Well, that'll be an issue that'll crop up over the course of the next 12 months. We don't have a set date for our election in Australia, but it's probably going to be in the first part of 2025, probably. That's the 3-year anniversary of the last election. So we're basically a year away from our next election. And as you said, people like to have $1 in their pocket. They prefer that than having dollar taken out by the
They will
government.
blame someone if they don't.
Correct. Well, already, there's the income tax cuts that are being paid on the 1st of July, which is actually a good thing. It's coming at sort of the right time for many people. They're going to get a little bit of a, $20, $50 a week lower in their tax payments. That's going to help some pay packets. But your concern about will we see a run-up of spending, a run-up of ideas, and just, literally this last few days we've seen the manufactured in Australia strategy from Albanese and, solar panels being made here and these sort of things. Look,
but he's not throwing money at it.
He's throwing a little bit. It's
relatively speaking.
And relative to the size of the budget, $1 billion here is not that big a deal. However, as we said, the election's a year away and a lot can happen between now and then. If I was advising Albo and Jim Chalmers, I'd be saying, keep a pretty tight rein on it, because people actually like a prudent government, and you can claim, the Treasurer can sort of say there at election time this time next year, if interest rates are coming down, we did the right thing, we kept a steady hand on the budget and the rates are down, so give us the credit for it. Now, whether that's strictly accurate is a story for another day, but in politics, its perceptions matter as much as reality.
So we got the budget coming. So
budget's on the 14th of May.
So it's a week after the next RBA meeting.
Correct, spot on.
What are you expecting? Are you hearing anything about, is Jim going to play the straight down the line, I'm going to try and keep running a surplus, we're not going to give too much money into the system?
He loves the budget surplus. They got one last year, and this year's, the latest numbers that they put out a few weeks ago were line ball. It's sort of literally a toss of a coin whether we get another surplus this year on the current numbers. He would love to deliver a second surplus. That said, there's a lot of chatter going on about whether they extend the energy rebates, because the electricity prices, when these rebates come off, the electricity price will jump. And by the way, that feeds into the headline inflation rate. Right. So there's actually I won't call it a bit of pea and thimble sort of trickery going on there, but if they extend that electricity rebate, not only do people pay a bit less for electricity, great, but actually has an impact on the CPI, the inflation rate. At this stage, I don't think there's going to be any big ticket items. It'll probably be my understanding, and this of course can change, we're a month away from the budget, my understanding is there'll be a range of relatively small, in terms of dollars and cents, items really targeted at the electorate. So there'll probably be no multi-$10 billion program to do this, that or the other. It'll be, a couple of $100 million there, a couple of $100 million there. And you've got to remember that the annual budget in Australia is $650 billion. So if they spend in grand total $6 or $7 billion, it's actually only 1% of total government spending.
So it doesn't matter.
I think, but as I said, I think the critical thing for Jim Chalmers as Treasurer, he likes a surplus. It's something as a badge of honour, and he can beat the Liberal Party over the head with it. So getting back into politics, which does matter in economics, it does, whether you like it or not. He can sort of say, the Libs never had a budget. I've got 2 out of 2. Yeah.
So do you think then, Steve, in terms of the upcoming budget, do you think that fiscal policy, because we don't hear much about fiscal policy these days, particularly in this inflation environment where it's been more about monetary policy, but do you think that fiscal policy could be used to, dare I say, manipulate the CPI number just by, for example, reducing the taxes on fuel?
Well, yes, and this is the interesting thing.
They could do that though. They could reduce the CPI number by saying we will, like Liberal Party did. During
that halving of the petrol tax in 2022, I think it was, which sliced about 0.3 off your inflation rate, which was pretty chunky.
Amazing. And if you
say 20 cents a litre or thereabouts.
All of a sudden your inflation number is lower, significantly lower.
The funny thing about that, Mark, the one thing that's really been booming, I don't know if anyone smokes, I don't, but I know that a pack of cigarettes is $40 or something for a packet of cigarettes. Oh. That's because, I think it is, that's because excise has gone up so much. And of course that goes into your inflation rate. Tobacco is in your inflation rate, just as beer, wine and spirits are.
It's not weighted very heavily though, is it?
No, the weighting is coming down because fewer and fewer people are smoking.
Petrol is weighted.
Petrol's got a very high weight. And actually beer, wine and spirits has I'd have to double check these numbers, about a 2% weighting. But if you freeze the excise, because normally those items that have an excise, it goes up in line with the CPI every 6 months. If you say, we're just going to freeze it for 6 months, you don't have to cut it. Then the contribution to headline inflation from beer, wine, spirits, tobacco, which is already hellishly expensive, petrol, those things altogether probably have about a 10% weighting in the CPI basket. You add them all up, which is pretty chunky. If you freeze all them, they're going to have they could have a zero contribution to headline inflation. First of all, and it eases people who smoke and drink and drive a car, So people will probably say, that's not a bad idea.
So it helps on the cost of living?
Helps on cost of living, and it also drives your headline inflation rate down. Which
means there's less pressure on the Reserve Bank than to either maintain their interest rates where they are or to lower interest rates.
And this is the really interesting thing, Mark, because people sort of say, it might only trim the inflation rate by 0.2 or 0.3 in annual terms. But when you're targeting inflation between 2 and 3%, which the Reserve Bank of Australia does, and inflation's 3.2 or 3.4, if you can trim 0.2 or 0.3 from just one little decision, and of course, with the effect of the tight monetary policy impacting on the economy and all these other things, anything that you can do to knock off a couple of tenths of a percent, if they build on each other, then lo and behold, you do your inflation forecast for 2025 and you've got a 2.5 or something even less, which a Reserve Bank would be delighted to see, even if they know that it's been manipulated, for want of a better phrase.
So why do you think that they don't do this? Why aren't they using fiscal policy? Is it politics?
That would cost them money. So if they freeze the excise, they don't get that extra.
But if they're not going to make, let's say they're not going to make surplus anyway, why wouldn't they just?
Yeah, well,
try and run a smaller deficit, but just for a period,
and only do it for 12 months. So it's not a permanent change. We're just going to freeze it for 12 months. So from 1 July 2024 to 1 July 2025, and then it reverts back to the thing. And again, as part of the cost of living package.
Totally.
Look, why? I don't know. Maybe they'd have trouble from the lobby groups and the anti-smoking ones, the anti-alcohol ones. Don't forget they're noisy.
But they're not taking it away.
Not taking it away, but just and as we said, the price of everyone's complaining about a schooner of beer being $15 now, and a packet of cigarettes $40, petrol $2 something a litre now. If you just say we're going to not take any more tax, we're going to freeze it for a year. It's going to. I don't know how much it would cost. I don't think it'd cost a huge amount, a couple of $1 billion a year. We're just going to freeze it. I think you'd get political kudos.
I do too.
You'd help the inflation rate at a relatively small cost of the budget. And if you've got a balanced budget or a small surplus and it turns back into a small deficit, you call it a balanced budget anyway.
So if I could just revert back to the international marketplace.
Yep.
And you mentioned what's going on in America. We often see in the Reserve Bank's statements, they used to be monthly, but their statements, one of the paragraphs that they cover off is international economies in international places like the US.
Yes.
If the US is now not traveling the direction that everybody was expecting it because of, and being represented by inflation increasing, what effect does that have on our RBA's decision making?
It is important. It doesn't stop them doing what they might otherwise do, but it is an important contributor. The US is still, along with China, about the equal biggest economy in the world. About a quarter, 25% of world GDP is the US, 25% is China, and about 25% is the Eurozone as a whole. So you add up France, Germany, Spain, Italy, they're the three big engines, if you like. If the US is having a further problem getting its inflation rate down, if in the lead into the presidential election in November, Biden comes out and spends another $1 billion, or Trump promises to, who knows? And then he wins, who knows? And you get this sort of dramatic economic effect from politics in the US. The RBA will be looking at that thinking, gee, we'll take that into account. It won't necessarily stop us doing what we need to do, but if it's a big enough effect and if it impacts on financial markets, that's where the catalyst comes. If we have a market turmoil or whatever by some of these policies coming through, the Fed hiking again, some people are talking about that, believe it or not.
Yeah, no
more cuts, not fewer cuts and put them back further into the future. Some people are talking rate hikes in the US. That would have an impact because, of course, the Aussie dollar would sink, presumably. US dollar would go gangbusters higher. Stock market would have a bit of a whatever. And so if we were to say have the Aussie dollar go to 60 cents, so down roughly 10% from where we are, and the stock market took a bit of a bath, it got crunched, that would have an implication for the Australian economy. And the Reserve Bank might think, gee, we don't want the Aussie dollar in the 50s. 55 cents, so if that's what happens.
So and their response?
So they watch the world economy closely. Look, rate hikes don't always work in protecting a currency. We've seen plenty of examples over the years where central banks have tried to hike rates to protect the currency. Doesn't work all the time, but it does have an impact on inflation. So if the Aussie dollar falls, the price of everything that we import, electronic goods, cars, all that stuff goes up. What's that? Inflation. something the RBA wouldn't like.
So international affairs, what's going on in the US is quite important. Where's China and Europe and our mates across the ditch? Where are they in terms of their economies?
China's weak. It's got economic growth of about 4.5%, which for China's quite weak. They're used to 6, 7, 8% economic GDP growth. They're growing at 4.5%. They've got a massive overhang of construction. Their last, 10, 15 years was driven in part by a construction boom. And people sort of colloquially will say, building roads that go nowhere and apartments that no one can live in. So they've now got this problem of dealing with an oversupply of dwellings, something that we in Australia certainly don't have. And so their economy is weakening. And as we're just sort of saying, as we're coming into set up for today, they've had the news on producer price inflation and consumer price inflation, both negative. They're discounting prices in China. So bad is their economy that prices are falling. Europe's in a bad way. Germany, the biggest part of the European economy, is definitely in a recession. I was looking at something on German house prices, something I confess I don't look at closely, but someone sent something to me, and they had a really good strong run up a decade ago. And in the last 12 to 18 months, they've dropped 12.5%.
Wow.
12% in a year in Germany. So that's chunky. That's a big fall. So Europe's in trouble too. The European Central Bank is probably going to cut rates before America. In fact, almost certainly now with the US issue that we just discussed. So the European Central Bank will probably cut rates first among the big ones, in addition to China, because their economy is so bad. And they've actually got inflation falling. They've actually got inflation in the 2s already. So their economy is really weak. And our friends in New Zealand, they're in recession. They met earlier this week and left rates steady at 5.5%.
Why?
Because they're not yet convinced that inflation's coming down. They're in a recession. They've had 2 consecutive quarters of negative GDP and probably another one when we get the March quarter numbers in about a month's time. Unemployment's going up. Look, they've a little bit like Australia. One of the things that's clouding the economy or reading of the economy, they've got very high levels of immigration too.
Yeah, no, but they've just changed that.
They've just changed it. The new government, Loxham's government, who took over from Jacinda Ardern, who took over, I can't remember the name of the previous guy. Anyway, they've had a change of government. So they've tightened up on their immigration intake. But for the moment, they've got this boom in immigration like we have had here in Australia, and that's distorted the economy in a sense. So that's probably why they're holding off. The market in Kiwi is still looking for rate cuts too, but not yet.
Right. So why don't we just have a look at your chart now? Because and maybe just tell us, Steve, on the chart when and where people can find out the important data that's coming out in the next month, the next few weeks.
And I'll actually start from the things that are coming out soonest. Labour market, and we discussed that quirky unemployment number which came out last month.
So the unemployment number that came out last month was 3.7.
3.7% unemployment, down from 4.1. That never happens, sort of thing. And so what the Bureau of Statistics, who calculate that unemployment number, do, they said, look, we've got a sample rotation because it's a sample of the community. They might have just happened to have captured a lot of people in their sample who had a job.
That's a monthly number, isn't it?
It's a monthly number.
Yeah, okay.
Now, we don't get the GDP numbers, the whole economy, the picture of the whole economy until early June. So we'll talk about that at our next one rather than this one. But the GDP numbers, I'll put that towards easing.
As it is currently.
As is to the December quarter.
Yep.
Because we get the March quarter numbers in June. Don't know what the Bureau of Statistics do. Can't get them out faster, I say. Anyway, I'm sure they do a good job. But we've had that fall in GDP growth from 0.6 to 0.5 to 0.3 to 0.2. So GDP is slowing.
Yep.
The interest rate hikes are working. If you wanted to be the pure economist and not be emotional about it and say, have the interest rate hikes worked? You say, yeah, look at GDP. Look at inflation's gone from 8 to 4%. It's working, so that's good news.
Just on GDP, we know what the American US is doing. You mentioned they've grown, and all the other places like Eurozone, China, and our mates New Zealand have come backwards. Does everybody use the same methodology to determine GDP? Pretty
much so, yes. The inflation data is different from country to country. They include different items and they have different weightings.
Yep.
They're different, but GDP is basically C plus I plus G plus X minus M, which is consumption plus investment plus government spending plus exports minus imports.
Right, so they're all using the
And they use
expenditure
pretty
method.
much the same approach, yes.
Right, okay.
Yes.
So
whereas inflation's different. I must confess I haven't checked the weighting, but the US has a thing called, I don't want to be boring, owner's equivalent rent. So even if you own a house, and by definition you don't pay rent, they assume what would you pay for the rent in that house.
Right. So it's like an opportunity cost type
It is,
calculation.
yeah. It's like very weird. Whereas we don't do that in Australia, which is probably a good thing. But we include tobacco, and I don't smoke, so I shouldn't include it. Well, it's the weighted average of what the average Australian does, and 10% of Australians smoke, so it's got a weighting within the consumer price basket.
Okay.
Wages data, we don't get to the middle of May, about the time of the budget, and wages I'm putting neutral to tightening. They've gone up to 4.2%, but like the inflation number, the last quarterly number was a bit weaker. We want to be sure about that labour market number to sort of put it into the neutral category. So in a sense, after the very, very weak wages for a decade, to be blunt, we've had a bit of a wages pickup. So that's why I don't think even the Reserve Bank's worried about wages growth yet. But we want to see the next one tilting just down a little bit from 4.2 back down to sort of 3.7, 3.8. That would be the Goldilocks wages growth. Not too hot, not too cold, just right.
And we haven't in the past, and I don't know which belongs in there somewhere, but we haven't talked about productivity.
Yeah.
It's a complicated one, but
it is.
I mean, but wages are going up, but without a concurrent productivity going up.
Yep.
It's a problem.
That's the problem. If you get, like, you could have 5% wages growth, but if productivity is going at 2 or 3%, which is very strong, fine. If wages go up 3% and you've got zero productivity, that's bad.
Yeah, because the vendor or the manufacturer, or let's call it, the producer has to charge more.
Yep, to cover the wage cost.
Can maintain their margin.
Correct. Wages are like any other cost. Your rent, your goods, your insurance, your cleaning, your whatever. Wages are a business cost.
But if all of a sudden
if my people are working doubly hard, I can afford to pay them. I can pay them. I can still make good money, and I don't have to put up my prices.
Because I'm selling more.
I'm selling more. They might be using a machine rather than just their hands. Do you know what I mean?
Yeah. But productivity is a big issue.
It's a big issue. I think,
and the RBA is worried about it.
They are worried about it.
They keep talking about it.
And we need to see those productivity numbers. They're only included in the GDP numbers, so we only get a quarterly update on the productivity results. The last one was a little bit better. But again, we're not dancing in the streets celebrating productivity. We need to see, we need to see a year of improving productivity.
Well, we've had bad productivity for years now.
Yeah, I think we have. And I think it's because our labour market doesn't have the skill set. You know, it was only, a year or two ago that we were still in some industries complaining about a skills shortage. You know, the economy was doing okay and businesses couldn't find workers with the appropriate skills. That kills productivity. I've got a business plan. I need to expand. I need to employ skilled workers. Can't find them. That business plan gets thrown in the garbage bin.
And it also that whole conversation, by the way, productivity and or skills, dovetails into the whole question about immigration. Who should we be encouraging to come to Australia? Obviously skilled.
Yes, that's a hot topic, and without getting into the size of the immigration intake, which at the moment's big, too big in my view. With the immigration intake, you've got to ensure, and you can choose who you get, and we want people with a skill.
Well, construction skills. It's a big one. We need
people who can lay bricks.
I saw 90,000. We need 90,000 in order to build the number of houses we need to build. We need 90,000 new immigrants or 90,000 new skilled workers.
Yep, in the construction industry alone.
Construction alone.
Let alone healthcare, aged care. You know, we've got an aging population. We're spending more money on healthcare, aged care. We need people to look after us.
Totally.
Our old age, Mark. Not there yet, but one day.
God.
One day. No. International economy, we spent a bit of time on that. I'm putting that in neutral, even though rate cuts are still being priced in around the world. You know, the economy is still generally weak. The US is the strong person at the moment, but everywhere else is weak. So I'm putting that in neutral. House prices, I'm putting that in neutral. And we haven't discussed them today, but that massive divergence. Perth's prices in Adelaide are up 15, 16, 17%. Melbourne's minus 2%. Hobart, Darwin, they're dead flat. Canberra, Sydney's now tapering off. It's only growing at sort of 4 or 5% now. A big divergence from city to city, but there does appear to be at last a bit of a cooling in the nationwide prices. Still going up nationwide,
but
but not as much as they were, say, 6 months ago. So I'm putting that in neutral. Retail sales, shocking. That's an easy one. Linked to that, consumer sentiment. We consumers are feeling glum, cost of living, mortgage rates, rent. Oh God, So when we're feeling glum, we don't spend. So that's an easy one. Building approvals.
No good.
Shocking, mate. We need to build 250,000 dwellings per year to keep up with population. The latest building approvals in an annualised figure was 150,000.
Yeah, well,
100,000 dwellings. Think about that. 100,000 dwellings short of what we need, and it's falling still. We need, I'm really worried about that. So this housing shortage that's impacting on rents and impacting on prices is going to be around for a long time. Business investment is good. Funnily enough, businesses are still investing in CapEx, IT, artificial intelligence, all those sort of things. So the NAB survey of business confidence, which came out about a week ago, was decent. It wasn't weak, certainly wasn't strong, but it was okay. So I'm putting that in the neutral comment.
Well, I think
column. I'll put the business confidence there too.
I think people investing in businesses because they're trying to get their costs down. I'd rather spend capital trying to digitize my business because I might be able to have less employees. That's type
exactly
of mentality.
The issue. So it is using machinery, equipment, artificial intelligence to do the job that a human 10, 20 years ago used to do.
And I don't have to pay wages anymore. And annual leave.
By the way, that's good for productivity when it comes off.
Yep.
So we in a year's time, we might be pleasantly surprised with productivity because of this business investment. We'll see. But
I hope you and I can smile at each other in a year's time about exactly
productivity's gone up, rates have come down, and commodities. I'm putting that into the slightly tightening. Last time I put it in neutral, I'm putting it back this way a bit. We mentioned the oil price going from 80 to $90 a barrel in the last month. That is inflationary, but it's not just them. I love looking at the commodity price numbers. Copper, lumber, steel prices, all these things that go into manufacturing have gone up. Food prices, wheat and these sort of things gone up. Oil, canola oil and all this sort of stuff. Believe it or not, they're an important part of the inflation basket, and they've all gone up. So I'm not putting it into tightening, but I'm just moving it back this way a little bit. Stock market, putting that in neutral. It's fickle. We had the inflation numbers in the US. Stock market went down, and, so it's all leveraged to that. And current interest rates, I'm putting that towards the easing side. They are restrictive. We don't need more rate hikes. The question has got to be these top really important indicators: GDP, inflation, labour market and wages, international economy. They've got to move a bit more towards the easing cycle before we push that final button
Last time
across.
we met, we had more in neutral and more in the easing. So
we did.
There's been a little bit of a shift to the left.
The things that have shifted are inflation, wages and commodities.
Yeah.
We've had new information. What do you do when you get new information? You change your mind.
Yes.
I think they're the same. I think many of these are the same. But the biggies was the inflation stuff out of the US. That was big news.
Yep.
The bond market really didn't react well. The stock market didn't react well. Wages 4.2 and the commodity price cycle.
So what's the money market saying?
Now, we've only got one 25 basis point rate cut priced in by the end of the year now, one and a bit. But let's call it, you were talking about in whole 25 point increments. There's only one rate cut by December and another one in the first half of 2025. So we've only got two rate cuts priced into the market. There's a sort of a residual of like 10 basis points or something. But a few months ago we had 4. Then it got 3. Now it's 2.
I heard the chief economist from Westpac, the new guy, talking the other day, and it was miserable. His conversation, it would sound like we're going to hell in a basket.
Really?
Like economically. So
yes.
So I don't know whether Westpac's changed their view on the number of rate reductions, but they were very aggressive.
I think they had 6.
Yeah, 7.
7 by the end of 2025.
Yep.
I confess I haven't seen their latest. They're probably going to wait for something to put out.
Yeah, they haven't put anything out, but I actually heard him being interviewed. It was pretty dismal.
Pretty grim. I know CBA still have 6 cuts priced in by the factored into their modelling.
Over the next
year and a half, year and 3/4,
Yep.
yes. So there's still every bank still got rate cuts, but
Push
like
that
the market,
further.
they're pushing them further back for the first one and taking 1 or 2 of them out. So instead of 6, it might be 5. Instead of 5, it might be 4. So the rates, no one that I'm aware of, is calling a rate hike. No one. All they're doing is saying on hold for longer.
But Kouki, I don't know if this is our mortgage holders and borrowers looking at this are going to be feeling great. I think it's because they're all hoping for a rate reduction in July, August, September, or something like that. Yeah. My gut feeling is that's right now on the data we have in front of us, subject to what we see in the next month. Yep. Things are getting pushed out.
Look, it still could happen. And as we've seen, this last month's been a change. If we're here in, I'll say 2 months, when we've got a couple more months of information and see whether there's one-off spike in commodities reverses and what's happening in the US reverses, we don't know. That's what the beauty of economics. You get a lot of shocking numbers. But it's not impossible to think that by, say, June, July, roughly 3 months from where we are now, we do have the unemployment rate at 4.2 or 3. That number turns out to be an absolute quirk. We do have the CPI at 2.8 or 9. It's not impossible. We do have the US weakening. We do have the European Central Bank and the Bank of Canada cutting interest rates. Maybe our friends in New Zealand will see the light and they'll start cutting interest rates. So we'll be part of that. It's not. I think that there's some possibility, and just as these rate cuts have been priced out, they can be priced back in pretty quickly with bad news. So like everyone else, I'm watching the Bureau of Statistics data coming through in the next month or so.
And I think our listeners should just remember one thing that's really come about as a result of the RBA review, that full employment has become a much more important factor than we ever had in the past for the RBA to consider, or the new RBA, which they haven't got yet, but they haven't announced yet. But because employment has become a much bigger issue.
Mark, you're spot on. In fact, that's what Treasurer Jim Chalmers wanted when he revamped the RBA and the RBA board. And
I know no one's talking about it. By the way, that is quite a significant political policy change for the so-called independent board.
And for the moment, while unemployment's still relatively well behaved, it's not an issue.
Yeah.
The problem or the issue, the tension might occur if we start getting unemployment, say, approaching 5%. Not impossible.
Yep.
And inflation's still at 3%, so not quite at 2.5%.
But all of a sudden,
and then what do? Do we start looking at that unemployment rate going towards 5%? Do we cut rates then? And that's the tension. We don't know. It hasn't been tested.
Is it
yet.
Equal billing though? So, my reading of it is equal billing. So before it was all about inflation.
Yes.
A little bit of employment, but it's inflation. Yep. Now I think the emphasis is inflation plus unemployment. So if inflation's at 3% and not where we want it, but unemployment's at 5%, we might have to cut rates.
Yes. I think you're spot on. That importance of employment, which is why the monthly labour market numbers.
Yeah.
And then about the 17th of May, I think it is, for the next one, those couple of numbers are really important. They have a huge impact on RBA, whether they're going to cut or not, or when they're going to cut, and importantly, how much they might be cutting over the next 18 months or 2 years.
I have to say, when I saw that come out, I thought to myself, the RBA is supposed to be independent, but one way of making them less independent is you change the mandate.
the criteria.
You change the criteria.
You're independent, but within this boundary.
I thought it was very clever. But by the way, I don't have a problem making sure that we have a good unemployment number anyway.
Indeed.
I don't really have a problem.
And in fact, you want to be fully employed. You want everybody who wants a job to have a job.
And by the way, I should be clear, we should be clear, it's not about unemployment, it's about full employment. So they talk about full employment.
Yes.
Now, full employment means... We don't know what it means, but we do know what they want to do when it comes to unemployment, because they've already talked about that.
And 4.5% unemployment rate is their line in the sand.
It's their non-accelerating inflation rate of unemployment.
About 4.5%. So if we get to 4.5% in the next 3 months, watch out. Yeah. Because they don't want it even at 4.75, let alone 5%. So that's why that last monthly labour market number at 3.7, that hit the screens. My God, what the hell does that mean? I'm sure the Reserve Bank have discounted that as a statistical anomaly. These things happen every now and then.
They're monthly returns too. Like it can't be accurate.
And a monthly number. It's just and so this month's survey, which will be published next week.
It might
Who
overshoot
knows?
the other way.
It could. We could get
Which,
a
by the
quirk.
way, equally, we should look
Discount,
at.
yeah. So if we get minus 100,000 jobs, okay, no. Look at an average. Look at a moving average of the monthly numbers to get the trend. The trend is your friend.
Yeah, okay, beauty. So what do you reckon? Next RBA
Next
meeting?
RBA on hold, yeah. The interesting thing about the last one, Michelle Bullock, the RBA governor, said she wouldn't rule anything in or out. She gave a press conference. A couple of journos really went hard on her. What does it mean? You're going to cut, you're going to hike, you're going to cut. I'm not ruling anything in or out.
Great answer. In other words, I'm not committing.
Like us.
Because she doesn't have
she'll
the
look at
data.
the data. The RBA, when those numbers come out, they'll be looking at the screens too, thinking great or bad or good, you know. Just like you and me, mate. They'll read the
And that's
news.
that's a point I'd like to make. We all sit here and not about so much you and me, but the consumers. We sit there in awe of what the RBA is going to say. You, the consumers, if you look at the data, you know what you can pretty much work out what the RBA is going to do.
If I only had two indicators in my life, and the RBA only had two, it would be the unemployment rate and inflation. If you know what's happening to them, you're about 95% of the way to working out what the RBA is going to do.
Correct.
Full stop.
And so you, the consumer, if you listen to what Kookie just said, where to go and find that information, abs.com.au, the Australian Bureau of Statistics, no one gets the data before anyone else.
No.
Not including the Reserve Bank.
They don't. Apparently the Reserve Bank do not get the data. It's so sensitive.
The information is printed, and we can all see it at
11:30 in 1 second.
Yeah, correct. We can all see it. And now that we've told you, or Steve's told you, what the RBA is looking for, you can work out pretty quickly whether there's going to be a rate reduction or no change at all, and you can start to get a sense of where it's going to be perhaps later this year. Kookie, thanks very much. Awesome.
Thanks, Mark. Brilliant.